Today, we're going to be going over a dreaded topic. If you learn and master this topic, breakup structures and change of characters are fun and all, but learning and mastering this topic, chef's kiss. Till this day, I'm still learning and mastering this topic. Why? Because trading is built on this. Liquidity. If you master liquidity, you will become one of the greatest traders of all time. Why? Because it's still a subject that is hard to master, but I can give you the basics today, which is what I'm gonna do. And mastering this concept comes with time, implementation, and practice. What is liquidity? All right. Liquidity in days terms, correct me if I'm wrong, well, you wouldn't know. But keep in mind, all of this is just theory. Nobody really knows, okay? But liquidity, if from what I presume it to be, is that liquidity is where buy and sell orders are resting. Liquidity is areas in the market where obvious stop losses are placed at, to where big institutions like to go grab some liquidity before going higher. So what does that mean, right? It pretty much means a regular trade, right? Let's say you were trading with, because you just learned breakup structure like I taught you, and you thought that's all you needed to know to trade. Oh, it's pretty simple. If price keeps breaking structure, I'll keep taking trades, right? So this is you. Price does this, break structure, does this, break structure, does this, break structure. You say, okay, this is pretty good. What I'm gonna do is I'm gonna get into a trade right here. I'm gonna put my stop loss at this low here, and I'm gonna trade it to continue this trend. Your theory is that you want price to do this, get you into the trade like it's been doing the last few times, get you in the trade, and continue higher. And boom, you make money. Your theory isn't wrong, but if it was that easy, you wouldn't have needed this course, would you? If it was that easy, brother, you wouldn't have needed me to teach you, would you? Everybody would be doing this and everybody would be a millionaire. What ends up happening is that instead of price coming down like this and going higher, what it will now do is it'll come down like this. You're like, but Dave, that's a change of character. I can just now go short. Well, it depends. Did the candle actually fully close underneath it? If the candle didn't close, no close, more than likely, that's a liquidity sweep and we're going higher. And you just got stopped out of your trade. Why did you get stopped out of your trade? Because this was an obvious place to put your stop loss. This is an obvious place to put your stop loss. This is an obvious place to put your stop loss. But Dave, that's not fair. Like, why are they gonna hunt the obvious places to put our stop losses? That's not fair. How are we supposed to make money then? Well, here's the thing. If you master this, right, and you only take trades when liquidity has been taken, you get some type of entry signal, and you get in, this stop loss here becomes extremely low probability of getting hit. Your trade is now protected because you waited for liquidity to be taken first. Am I making sense? That's how liquidity works. Liquidity, and I can show you prime examples of this on the chart. I'll just go to somewhere random, right? Okay, for example, here. So if you were using what I taught you in the previous module, right? This right here is a change of character. Why? We came higher and then boom, we changed character. After we changed character, what did we do here? We broke structure. We broke structure right here, right? So what are people doing? Because we've broken structure, this is the high, this is the low. A lot of people are taking shorts here and you're putting your stop loss here because why? What are they expecting? They're expecting this to keep happening. Pull back, break, pull back, break, and then pull back again and break. And they want to ride this bad boy all the way down. That's how you're supposed to normally trade, right? But somebody who understands liquidity knows that it's better to wait for this high over here to get taken before even looking for a trade. So a lot of people are expecting this to continue. Why? Because it's the same thing, pull back, break of structure. Pull back, now everybody's expecting break of structure. Everyone's expecting this low to get broken. What ends up happening? Price comes first to take the liquidity. Over here, it takes it out first. And notice something. It doesn't close above the high. Because if it did, that would be a change of character. It doesn't close. It wicks it. Long wick. Massive rejection with volume. Now, this stop loss here is protected. Now I can start looking to take this trade. Boom. TP hit. That's liquidity in a nutshell. You see how it works? We also call it manipulation. Liquidity is also known as manipulation. So let's go back to the whiteboard and let me break down the different types of liquidity. Liquidity that I love using the most. Session liquidity. What is session liquidity? The market has different sessions. It has Asia session, New York session, and London session. Right? During those sessions, price will create highs and lows. Those highs and lows are known as session liquidity. Go into your chart. Session opens for me is at the first one is at 7. 7 is New York session open. 1 is London session open on Central Time. Central Time. 1 London session open, and 19 is is Asia session open. These highs here, the highest point in each session is known as session liquidity. This high, the very highest point in this session, session liquidity. This high, the highest point in this session, session liquidity. This high, the highest point in this session, session liquidity. That, my friends, is session liquidity. Another one, previous days, highs and lows. That's a good, strong liquidity. What was the highest point made on Wednesday and the lowest point made on Wednesday? That's a good draw. That's a good liquidity pool. Hourly highs and lows. It's also a good liquidity pool because we trade the 5-minute. So any high and low formed on an hourly, really good. And then I also now have minor liquidity pools. A minor liquidity is pretty much any high or low. Any single high or low, because this is liquidity, this is liquidity, this is liquidity, this is liquidity. But I don't know if price wants to grab this, and this. But if this is an hourly liquidity, I know price more than likely wants to grab this. Nothing is certain in trading. What you need is just strong conviction of which one you think has higher weight than another. So because this is hourly and this is regular, price might just do this and continue higher. But if this was regular and this here was hourly, I'm expecting price to do this and then continue higher because there's a stronger one below. Are you starting to kind of see how trading works? I'm not trying to scare you out of these modules. I'm just telling you is that if you master liquidity, you pretty much mastered where price is going. You've learned it. Liquidity is really good because once you use liquidity along with market structure, change of character, break of structure, and then I'll be getting more into detail much later in the modules about fake breaker structures, fake change of characters, how to spot manipulation, how to know when liquidity is coming, all that fun stuff, time zones that make liquidity sweeps happen, all that fun stuff. Man, you're about to learn a lot. But I'm excited to teach y'all. That, my friends, in a nutshell, is liquidity. I'll see y'all boys in the next video.